Welcome, aspiring first-generation business owners. If you've got a truly transformative business idea but have always kind of felt like massive institutional funding was just out of reach, well, you are absolutely in the right place. In today's Explainer, we're going to completely demystify how to secure major government funding. We're cutting right through all the dense banking jargon and looking straight at the facts to show you exactly how to navigate the Stand Up India scheme. Okay, let's dive right into this. At its core, this initiative is driven by a really powerful philosophy. Stand Up India is not just a credit scheme, it is a movement to democratize entrepreneurship and build a self-reliant India. So this isn't just about handing out loans, right? It's a massive structural push meant to empower historically marginalized communities, specifically scheduled castes, scheduled tribes, and women. It's about ensuring equal access to financial resources and breaking down those walls that have historically shut millions out of formal credit channels. So here is our blueprint for today's Explainer. We're going to systematically cover 1. The vision, 2. The rules of eligibility, 3. The money involved, 4. The action plan to apply, 5. The essential docs you need, and 6. The future of the scheme. Section 1. The vision, empowering new entrepreneurs. Section 2. The rules, who is eligible. To actually fulfill the government's massive vision for inclusive growth, every single scheduled commercial bank branch has a mandate. They must facilitate a loan for at least one SC or ST borrower and at least one woman borrower. So, are you ready to see if you qualify to be one of those entrepreneurs? Let's look at the non-negotiable core requirements. First up, you've got to be over 18 years of age. Second, you must be an SC, ST, or woman entrepreneur. And third, you can't be a defaulter with any bank or financial institution. A clean credit track record is absolutely essential. Now, I really want to clarify a super common misconception here. Women from the general category are absolutely eligible under the women's quota of this scheme. There is no exclusion there. Oh, and if you're forming a non-individual enterprise like a company, at least 51% of the shareholding and controlling stake has to be held by an SC, ST, or woman entrepreneur. Now, what's really interesting about this slide is the strict focus on greenfield ventures. What exactly does that mean? Basically, it means it must be your very first-time venture in the manufacturing, services, or trading sector. If you already have a running business and you just want a loan to expand it, you do not qualify under this specific scheme. Stand Up India is laser-focused on building something entirely new from the ground up. Section 3. The money. Decoding the loan structure. All right, let's talk numbers. We are talking about institutional capital ranging from a minimum of 10 lakh all the way up to a maximum of 1 crore rupees. So the crucial point here is how this money is actually structured. Stand Up India utilizes this really clever composite loan concept. It bundles your needs into one single facility to just totally eliminate the headache of managing multiple loan accounts. As you can see, about 65 to 70% of the project cost comes as a term loan. This is for your heavy capital expenses like land, plant machinery, or furniture. Then the remaining 30 to 35% acts as working capital to cover your day-to-day operational cash like buying raw materials and paying wages. And when it comes to actually paying that term loan back, the scheme offers a very generous repayment window. Look at this, 7 years. You have up to 7 years to repay the term loan component. This extended runway is specifically designed to alleviate borrower anxiety while you take the time to establish your new business in the market. But you know what? It gets even better. Take a look at this number, 18 months. This right here is an absolute game changer. It's a moratorium period. This means borrowers can get a grace period of up to a year and a half from their first disbursement before their very first EMI is even due. That gives you 18 solid months of breathing room to get your operations running and actually generating revenue before you have to start paying down the principal. And to further protect you, the scheme mandates that banks have to offer you the lowest applicable interest rate for your category. The interest rate ceiling is strictly capped at the bank's marginal cost of funds-based lending rate, or MCLR, plus a maximum of 3% plus the applicable tenor premium. Having this legal ceiling ensures that your access to credit remains highly affordable, which is huge. Section 4. The action. Step-by-step application process. Now that we know you qualify and we totally understand the money, let's look at the action plan to actually apply. How do we take this from a concept on a slide to cash in your bank account? Well, the journey follows 3 distinct steps. Step 1, you register as a borrower on the official portal and just fill in your basic details. Step 2, if you're a first-time entrepreneur with zero experience, you can actually request hand-holding support right there for training and guidance. It's like having a built-in mentor. Step 3, and listen closely because this is absolutely critical. You must prepare a comprehensive, detailed project report, or DPR. This report has to cover your business plan, projected financials for 3 to 5 years, market analysis, and technical feasibility. A strong, banker-ready DPR is the absolute backbone of a successful loan sanction. To kickstart this whole process, you're going to head directly to standupmitra.in. This is the official digital gateway set up by the government of India. It's a seamless, single-window platform where you can apply online, find your nearest participating bank branch, and even track your application status in real time. And behind that portal, you've got 2 massive support institutions anchoring your loan. On one side, we have SIDBI, the nodal agency managing the portal and providing refinance to banks so they actually have the liquidity to lend to you. On the other side, we have NABARD, which specifically steps in to support rural and agro-based enterprises. Together, they create this incredible, massive ecosystem of government support backing your entrepreneurial journey. Section 5. Essential documentation. Okay, let's talk paperwork. I know it's not the most exciting part, but don't let it overwhelm you. First up is your personal KYC and identity. A PAN card is absolutely mandatory, no way around it. You'll also need your Aadhaar, passport-sized photographs, utility bills not older than 3 months for address proof, and importantly, if you are applying under the SC or ST category, your official caste certificate issued by the competent authority. Getting these basic identity proofs ready early prevents those super frustrating delays later on. Second is your business documentation. This is the whole shebang: partnership deeds or certificate of incorporation, your UDAM registration, GST registration, and any specific licenses like FSSI if you happen to be in the food sector. Why does this matter so much? Because a typical sanction process takes 4 to 8 weeks, but missing or incomplete documents are literally the absolute most common reason for lengthy delays. Give them everything they need on day 1. Section 6. The future. Stand Up India 2.0. Let's move to the final piece of the puzzle and see how this builds into the future. Following a comprehensive review by Niti Aayog, Union Finance Minister Nirmala Sitharaman addressed the Lok Sabha in March 2026 and stated, "The Stand Up India scheme came to an end in March last year. It was studied by Niti Aayog and is being redrafted to provide more benefits to beneficiaries." Essentially, what the government recognized was that the original 1 crore rupee ceiling was simply no longer enough for micro-businesses trying to truly scale up in today's fast-paced economy. And this brilliantly illustrates the future. The new maximum loan limit laid out for Stand Up India 2.0 is doubling to a massive 2 crore rupees. The ambitious goals for Stand Up India 2.0 over the next 5 years are to fund 5 lakh first-time SC, ST, and women entrepreneurs. So what you should take away from this is the absolute importance of readiness. By getting your UGM registration, your GST, and your clean credit history ready right now, today, you position yourself perfectly to be a first mover the moment these new 2 crore guidelines officially drop. So, we've covered the vision, the rules, the money, and the action plan. The institutional finance is out there, waiting to be claimed by those bold enough to build something completely new. So, what does this all mean for you? Well, my final question to you is this: are you ready to step out of the shadows, build your greenfield business, and help build the nation with Stand Up India 2.0? The capital is waiting. Now it's your turn to act.